holding up with a gain of around 0.8%. But let's talk about those big listings then. Bansal Wires has listed at a very strong premium as well, giving competition to MCure today. Its offer price was around 256 rupees per share. Nigel is here with the details.
Well, that's right. Bansal Wires had a blockbuster listing, in today's trading session. They were looking to raise close to around 745 crores odd, and the entire issue was a fresh issue. It wasn't an OFS, so all the money comes back to the company. The issue was subscribed close to around 60 times odd, but tells you that this issue saw a lot of demand. What were they raising this money for? Well, primarily to repay some of the outstanding debts as well as borrowing, and also ease the working capital requirements a little bit. Now, if you look at the annualized EPS for the last year, it was around 6 rupees odd. Now, since it's listed at a premium of close to around 35%, how do things shape up? Well, at this listing price of more than 35%, it trades at a PE of around 56 times odd. The nearest possible peer could be Raj Ratan Global Wires, and that one is currently trading at around 43 times its trailing earnings. Remember, Bansal Wires is far bigger. Though the margins are relatively lower at around 6% odd, it's trading at a bit of a premium. On the ROCE basis, both of them trade in mid-teens, 15 to around 18% on the ROCE basis. Not like to like, but as of now, it appears that Bansal Wires is a little bit more expensive in comparison to Raj Ratan Wires. Now, why is the street enthused? And why do they believe that earnings will improve from here on? Firstly, they've raised this money of around 745 crores odd. It will be used to, deleverage the balance sheet. And the management told us they'll almost be debt-free. Point number one. So interest costs will get saved. They're more than doubling their capacity. From around 2.5 lakh tons, they're going to around 6 lakh tons. So operating leverage will play out, and there is growth outlook as well. And point number three is they're changing their mix. They're getting into specialty steel. Out there, the tonnage could be around 20,000 tons as per what the management told us. And this will, call for higher margins as well. So profitability will look up from here on. So maybe on a forward basis, it's not so expensive. What are the risks? Well, they're not backward integrated. So raw material risk, obviously, that's a bit of a risk for them, both in availability as well as fluctuating. And also, since they're looking at upping their export exposure, currently it's in low teens. So any kind of change on the geographic dynamics, well, that's what could hurt them as well. All in all, a solid listing is what we're seeing, and the street is looking ahead that the earnings will improve. Back to you.
All right, Nigel, thanks a lot for that. That's about a solid listing. Meanwhile,